Barbara Doran, how are you feeling about the market after we've seen such a tremendous rally and continued relentless buying of these mega cap tech stocks?
Yeah, relentless is the word. I mean, it's been 5 straight months, and everybody has been waiting for this rotation into economically sensitive cyclical names. But I think we still don't have enough economic data. Yes, autos look great, housing looks great, manufacturing is recovering, but we still have the consumer services side, which is 2/3 of the economy, and we still have pressures there because the pandemic is not yet contained. Signs of improvement, but it is still having a dramatic impact on consumer behavior. So the question is, when would you sit? I've been riding these names all the way up, and of course getting increasingly nervous because the valuations are stretched, even given an environment of zero interest rates with the Fed's commitment to keep them low for some time, which is always positive for valuations. But I think what you're starting to see is a slow rotation into some of the cyclicals, maintaining positions, I certainly am, but trimming back and starting to rotate into those names because I think it's a bit early. I don't think we're going to see a vaccine in the next few weeks, but we don't know. Could be one by year end, but then there'll also be execution on that or some major therapeutic that will change the ball game. So I think investors are starting to get positioned, and you're starting to see this come out in the flows, in the fund flows.
Let's talk about that right now, because there's a new report today saying value investing may be making a real comeback. It's according to Bank of America's recent assessment of client flow trends. The firm found investors shifting assets into cyclicals like financials and energy last week. It was the first time financials actually saw net inflows in more than 2 months. Meantime, clients pulled money out of consumer discretionary and communication services. Bank of America also reported their clients were net sellers of growth ETFs for a 4th straight week. That was a little early, perhaps, Barb, if at all. You said you're rotating into cyclicals. Financials? Is that where you're going?
Not yet. And I will not yet be in the financials. Right now, the financials seem to be responding strictly to the low interest rates. And not actually, they're much more tied, to the economic recovery, but they're not showing signs of that yet, just a little bit. So, no, I'm starting to look. I am not yet doing it. I may be behind the 8 ball, but I don't think so. So I am just getting my shopping list ready, and I will start to slowly start to buy some positions, but very small, because I do think we have more to run here because, frankly, I don't see any signs we've got this pandemic under control. We're heading into fall, flu season, another phase, indoor dining, which, I know in the Northeast that is really lagging the South, where you see people being much more comfortable. But I don't think we've got this pandemic under control, which will mean the recovery, while it continues, will be slower than we would hope for.